Hi guys, this is Lauren with Verivest, and today we're meeting with Chris Carsley and Brock Freeman from Kirkland Capital Group. Welcome, guys. We're really excited to have you here
Thank you,
today.
Lauren.
Thank you.
Yeah, so let's get started with our first question. I'd love to know, how did you guys end up where you are today? What's kind of your origin story and your background?
So I started out with capital markets actually
Yeah.
in Taipei after a finance degree. Later, coming back to the United States, I underwrote loans for a private mortgage bank. And then I got very frustrated with the process and the manual processes that were existing at the time. And I started to automate and found that I had a knack for tech. So that really has
Hmm.
defined the rest of my career is using technology to automate processes, to really find places where technology can disrupt things. I did go on and I spent both time in pure underwriting, auditing underwriters and underwriting loans, and then in various other places around real estate lending. And then I also took a turn in corporate to finance technology, working for Microsoft and some others, where you learn a lot working for those large companies and figuring out when you deal with lots of people how to automate things and how to make things so they don't break. So now, come full turn, I'm back in the real estate industry and really happy to be back here after a few years of being outside of it. And we saw a gap in really this what we call micro balance loans in commercial real estate, which are loans under $1 million. And it sort of made sense why there was a gap there. A lot of it is around the manual processes and processing that still happens within our industry, which within the debt industry for commercial real estate. And looking at my background, I figured, well, this is a good place where, again, we can apply some disruption. And why not make that happen? And Chris was really the perfect partner there, filling in some gaps that I didn't have on really the fund side. So I'll let him take it away on that.
Yeah, no, my origin story of this came from a totally different angle. My career was almost purely investments. I dealt with both traditional and alternative investments. I managed money for a number of different complex clients, and one of those components that definitely was in those accounts was real estate. So I looked at real estate from a direct investment standpoint, esoteric real estate from a valuation and a risk assessment within people's portfolios. But when Brock brought this idea to me of, hey, we have this opportunity to create an investment fund that is dealing in microbalance and we can really offer enhanced returns and there's a diversification component. He definitely knew the right language to address to me. It was something that already was resonating because my background and my network with a lot of RIAs and high net worth investors, I was quickly aware that this low interest rate environment, has been around for years, has been a problem for fixed income, and it was just exacerbated with COVID. I mean, sending it rates to zero, and then you were looking at a situation where now I don't think you can find an article that's not put out by a major Wall Street firm that's not talking about, how the fixed income portion of your 60/40 is dead. You're not going to have the diversification aspect. So I looked at this and said, wow, what an opportunity to bring a product to the table that is just at the right time that a lot of people are going to be looking for. So,
Yeah, that's really great. I love how you guys have been able to bring your diverse backgrounds together and really work together.
Yeah, to
Right.
work together as a team.
Yeah,
oh yeah, especially when people know what they're
absolutely.
doing too, and you're bringing very unique skill sets to the table. It
Yeah.
makes it you're learning and getting the job done. So,
Yeah,
Right, right, absolutely. And it definitely you guys are able to bring your different backgrounds together and kind of have various insights and bring those to the table and really be successful with that.
that's
So
right.
that's really great. I'd love to hear how you guys source deal flow and what's your kind of acquisition strategy.
I mentioned how I had been around the real estate debt area for a long time and filled various roles. For several years, I also went out to the field and sourced deals as well. So I built up loan broker networks and was a sales manager in that area actually two different times before. And what we've done here is really applied that same sort of formula to what we're doing here. So we source deal flow exclusively from commercial loan brokers. And there's a lot of them out there. So for us, we asked ourselves the question, what was it worth it for us to go out and try to do something direct, or was it worth it to go out there and really help these loan brokers who already have established relationships with a lot of realtors, a lot of borrowers already, and simply offer them a product that filled a gap that they had told us that they had. And so we went that route. And so far, it's been very, very successful. We're able to scale it very quickly. As more money comes into the fund, we're able to go out and get more loans from them. And they're very happy to see this product in the marketplace, which has not been something where they've been able to get money flow for their deals in the past.
Right. And what would you say kind of are the key markets that you operate in and why?
We operate market-wise across the United States. There is a lot of lenders that you run into, particularly in California. I noticed that only do California, and that's understandable from a way that people have done loans before, particularly in the commercial side, where they've gone out and they need to see something up front. It's really a boots on the ground, but in our opinion, it's a little bit anecdotal. Well, I feel good about this loan. And I'm not discounting having a good gut feeling. That's probably one of those red flag things where if you don't have a good gut feeling about something, it doesn't matter what the numbers show, there's probably something that you ought to be considering there. Mm-hmm. On the other hand, what we want to drive is a more a more objective approach instead of the subjective approach to doing loans. And so we take a lot of data and we apply that and we use that to decide whether a loan might be worth doing or not. But that also allows us to operate across the U.S. and in secondary and tertiary markets, with which Chris and I feel very comfortable with. We look at the economic data. Is this an area that's stable? Is it growing? Maybe it's not doing well. I mean, that's sort of the nature of what we're doing with these value-add deals, particularly in multifamily that people are picking up. It's probably in an area that is not wonderful, but it's the emerging area. It's those areas that are up and coming. Does the data show those that so we're not just doing something that's subjective? So that's really how we determine whether it's a market we want to operate in. Is sort of a little bit different than the other commercial. We don't pick markets. We look at markets where we get loans submitted in, and then we look at the economics and say, does that make sense for us? Does that make sense for us to risk both our and our investors' dollars on that loan?
Yeah. Yeah, absolutely. And, you touched on this a little bit already, but what would you say is kind of your investment philosophy? How do you determine whether a deal is worth doing and moving forward with?
Absolutely. I think I touched on that a little bit, but as far as determine whether a deal is doing, what we look for is, one of the biggest things I think is the borrower going to make a great deal of money on the deal? Because honestly, I mean, it seems strange. It's like, why would you care about that? Yet, really, that's a key component here. Because if there's not enough meat on the bone for a borrower, buyer, or someone getting some cash out to see on the other end for them to make money on it, then if something goes wrong, there's not enough cushion in there, and we're going to end up with a loan back. And we don't want to see that. So part of our underwriting is seeing, hey, are they going to make double-digit plus returns on this deal from their perspective? And if not, that's a big red flag. There's a number of other. I mean, there's a ton of due diligence, obviously, in this short-term call. We don't have time to really dive down into the tremendous amount of stuff that we do. But, it's everything from background checks to, looking at the data on something and considering those things. But, part of that is that, look, we're here to help them make a lot of money. And we'll make money together. Yeah. So that's one of the biggest things we look at.
Yeah, and that all sums into one key category of, one of the questions that Brock and I always ask ourselves at the end of the entire underwriting process is, would we want to own that property? If we ended up with this, would we be happy with that? So, yeah, there's a lot to cover and there's lots of nuances that go into the investment philosophy. But at the end of the day, it's something, would we feel comfortable owning that property if we had to end up with it? And that's that culmination, that last final question that we always have, everything we go. But, running a fund it's not just one piece of what we're doing. So our investment philosophy definitely leads into how we think about our portfolio. And one of the things that in part of a fund's investment philosophy is really how you're operating that fund and that portfolio. So we believe in really having fees aligned with what we're providing to our investors. We really believe in full transparency, understand, making sure that our investors at every point understand what's being added to the portfolio, why it was, and how it impacts that portfolio. So that's the other side of investment philosophy of when running a fund. There's how you're going to operate that and how it integrates and meshes with the investors. So
Hmm. Yeah. Yeah, that's great. And, once you make that investment, how would you guys say that you generate value and kind of determine return on or of capital?
yeah, this one this one's once we make a loan, it's pretty set in stone. It's
Right.
not like when you're dealing with syndicators where there's a lot of things syndicators can come in and really have a material impact in the operations of on the ground aspect of the property they're dealing with. With regards to a fund, we're actually the lenders, and the borrowers are the ones that we're really understanding their business plan and making sure that they have something that makes sense and that they can actually carry out and act within the time frame that they've allotted for the loan. So if you're saying you've got a number of different value add projects and you want to do a 6 month loan, well, that might be a tight time period where we might push the duration out on that loan and really work with that borrower to understand that. But once we've deployed a loan and we've got a number of loans in the portfolio, it's really about the ongoing monitoring. It's really, really important. This is not a fire and forget. You've got monthly updates. We have regular contact with the borrowers, understanding how things are looking, what's progressing, what's not going right. I mean, there are things that don't go right. I mean, we had one property where there was some vandalism on site. So understanding how that's going to impact the duration that he needs to complete his project, and then the other aspect of that is, we need to be a very dynamic team, and what I mean by that is we're dynamic in the way of uh, being agile given macro environment changes. And I think we saw one last year that really took a lot of people off guard. And one of the things that we saw quite early and made adjustments in our underwriting and also how we were moving forward with loans was the fears of rent collections and
Hmm.
eviction moratoriums, because a lot of our portfolio is made up of multifamily. And one of the things
Right.
that Brock and I sat down and were able to do is recognize that risk, recognize that was a risk that was going to be potentially carried by our investors, and how would we possibly mitigate that. And one of the things that we changed was having a prepaid component added to our loans at the time of close, so that what that did was allowed us to ensure that there was a number of months that would already have interest collected for our investors, sort of pushing a little bit more of that current risk due to COVID back on the borrower. And so that's one of those things that that's how we continue to add value at the investor level, is more from monitoring risk mitigation, to make
Yeah.
sure that we're not taking undue risk that we weren't estimating at the time that we wrote the loan.
Right, absolutely. And, as you mentioned earlier, I'm sure COVID really made you guys reconsider kind of your plan or the way that you went about things. Definitely. I mean,
I remember
yeah,
my exact comment to Brock was, put on your suspenders and get ready. We're about to launch a fund in the middle of a left tail event, so this is going to get entertaining.
right.
I've been, after 25 years, it's kind of scary. I've been involved in four left tail events, or things that aren't supposed to occur that often, whatever you want to call it,
Yeah.
black swans. And so here we were again, launching the right product, right time, all the right ideas, but there are certain things you just can't control when you have
Absolutely.
that type of event. But we've done fairly well.
Oh, good. Good. That's good to hear. And so lastly, I know you guys are quite the dynamic duo and have quite a good team going, but I'd love to hear who kind of your key players involved are, that allow you to execute your acquisition and asset management strategy.
Yeah, absolutely. This is definitely a team sport, and
Yeah.
I'm happy to have Chris on board with me. I definitely couldn't do this myself, and I'm happy to add value where he hasn't have those background, and so. But also, it's the rest of the people on the team. We have an excellent support team, including our CFO, who has background in fund accounting and audit knowledge. That's been really great to have. An operations team that assists with document collection, servicing, what we call our finance operations, who works under the CFO, as well as the loan ops or loan operations, which is the underwriting, the servicing team that I'm in the middle of building and is starting to take on more and more as we grow. And then everyone also, including Franny, who helps out with marketing, social outreach for our company. So it's really fun to, as much as it's a lot of work, it's fun to launch this thing, really pull a great team together, see everybody kind of hit stride and start to work well together. And
Yep.
honestly, I feel great about providing jobs for people. I mean, bottom line, it's great to start up
Yeah.
something where we're not only helping people, we're doing well and doing good with both the loans that we provide for a lot of communities where it's much better from an environmental standpoint and for the community itself to improve, let's say, a multifamily asset from a Class C that maybe not doing well to a Class B that's great workforce housing, and that's the majority of projects we do. A lot of those
Yep.
are in maybe minority neighborhoods, and a lot of our borrowers are minority as well. And we're super happy about that because it's their journey
Yep.
that they're starting on in this whole real estate thing as well. So all around, super
Yeah.
happy and super proud of what we've built so far.
Yeah.
That's amazing. Yeah, that's really, really great to hear. So, Chris and Brock, thank you so much for meeting with me today. It was really great to hear more about Kirkland Capital Group, and we look forward to working together.
Likewise, we look forward to it.
Yeah,
Thanks, Lauren.
absolutely.
Thank you, Lauren.
Yes. Thank you.